Today, folks, I got a superstition you can take all the way to the bank, baby. We're talking about buying those dips, doubling down, baby, on the dippity dip that is likely to come in this superstitious period, being October, Halloween, one of my favorite times of year. But perplexingly enough, every single October for the last 5 years has been a bottoming in the market. Let me show you. I know this sounds so weird, and it is kind of really odd data, but if you go back to the pandemic era here, we had this massive correction followed by a nice run up. For some reason, there was a big pull down in October. They bottomed out October 30th, right? And that was 2020. Coming to 2021, endless rallying going all the way up to about August, September, and then we have this bottoming out right in October, right? And then you kind of go into 2022 where the sell-off was caused by the higher interest rate environment, a lot of fear in the market coming to September. Boom, we bottom out. We have another, bottoming big dip period in October, right in the midst of October there. And then we go into 2023. Very similar thing, but you can start seeing it becoming a little bit more pronounced here, right? So basically from August, kind of mid-September here, we started to see the sell-off of about 5 to 10%. It always seems to be about 5 or 10%. And then here we are, folks, in 2024. And are we going to get another magnificent sell-off that's going to give us a nice 5-10% dip in the market? I'm not sure. I got cash on the sideline. I'm still collecting my checks. I haven't invested as much in the last week, but I am hoping that in the coming weeks, I can doubly down on my dippity dip buying, baby, because yeah, we have election cycles coming up, which are obnoxious as all hell. I'm tired of seeing my CEOs that I like to follow, like Elon Musk, constantly offering political rhetoric. Your job is to run your damn companies. I don't want to hear about what's going on between political divisiveness while you separate your audience, and I got to listen to crap all the time. But we've got, again, election cycles, interest rate cut potentiality here. We're talking about the jobs report this week. So much stuff that will not matter in the next 10 or 15 years. You won't even remember these conversations, but people are going to use them as an excuse to dictate where the market's going to go, because we've seen the peak, as it so seems, in the chip sector, right? Even after the incredible earnings coming out of NVIDIA, TSM, they all seem to have topped out like a good, couple months ago, which could just be, again, a sign of overbought territory in an overhyped market where we haven't justified enough value yet to be trading at such high premiums. But I'm just one man yammering on the internet as we continue to see the correction from these higher tech companies that have been promising so much but delivering so little. I'll explain what I mean by that. As the lower half of the market recovers, with the exception of oil, because oil prices have been coming down, which is also very peculiar. Could be a sign of October coming around, baby. I don't know. But Tom Lee, the endless bull, always gives us some hope. A sign of a destitute where we can always walk, we'll be a shepherd to your lambs, if that makes any damn sense, because let's just take a quick listen.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When the market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip. So I think this is one of those where investors need to be cautious, but in the back of their minds know this is a strong market.
How far down, Tom? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's been testing investors' patience. But I think, we should expect turbulence. I would just say at the bottom line is it's a strong market. So I don't think we've seen the top for 2024. It's just that the next 8 weeks are tougher.
Yes, the Qs will be the savior, folks. I think we're overvalued in the Qs today, but maybe if, the Qs and the Apples and the tech companies of the world can start proving a decent quarterly revenue here in the next quarter, we could rally to all-time highs. But I'm really dictating that the bottom half of the market on interest rate cuts need to start making up for the loss that we're going to see in tech companies here momentarily. And let me just spread this out amongst random cherry-picked companies like TELUS, a company that I might buy on an individual basis here soon, because this company today, at the backdrop of a terrible market, is green. You look at some things like Hydro One, Fortis. Most of these stocks are flat or green. Manulife, the insurance level. So if you're buying utilities or safe boring stocks like Berkshire Hathaway, you're likely in the green today, though it's fighting a selling market, right? Which could be the sell-off of index funds dragging these a bit, but they're still fighting against it and going up. Which again is just a sign. It's like companies like Verizon, right? Like look at how well Verizon's done here. If you've been buying the dips, it's up 2% today, guys, in a period where the market's getting devastated. This was a great buying opportunity on the U.S. side of the border. The Canadian telecoms have not recovered this much yet, right? If we zoom out on the all-time period here, look at the recovery. It's been beautiful. So my prediction here is we're starting to see the latter half of the interest rate recovery stocks. So you're kind of just starting to see the glimpse of the recovery on those things, and you're kind of starting to miss the period to buy them. We talked about this with like Royal Bank and some of these beautiful bank stocks that got absolutely wrecked, that you had a great chance to buy on. A lot of those dips getting bought up. Same thing's going to happen with TD eventually, I think, maybe even BNS and a lot of these other banks. PSA, I mean, you look at the interest rate recovery real estate sector that's about to unfold. Those things are still going up today. Yeah, with the exception of a few stocks, I mean, a lot of dividend things are doing well. So I'm always perplexed here, you know, with that's going to be the word of the day, perplexed by how the Buffett thinks, because I feel like Buffett's been pivoting into that lower half of the market as well. You know, selling off Apple and Bank of America is a bit of a mind-blowing thing to see him do, the record amount of cash that Buffett has. And that, again, leads into that fear of what does he know? I mean, Bank of America is up 20% this year. Apple's also up 20%. I don't think Bank of America is like terribly expensive, but when I look at like Apple, I'm kind of like, oh God, 34 PE. And you think people are really going to see any reason to upgrade on this next cycle? We're going to get the new product launch this September, probably, when it comes to the new iPhone 16, the watch, you know, all that stuff as people get into the holiday season and back to school. So we'll see if Apple can justify 34 PE. I want to remind you guys that if you take a look on macro trends here and you just kind of get a scope for how expensive this is for Apple, I mean, basically we've had absolutely no earnings per share growth to any real magnitude, yet at a 34 times multiple, it's pretty much the highest in its history for very nominal growth, right? So I don't know. We'll see if Apple can justify. I still think we're in correction territory, which is why I'm fixating so much more on dividend stocks. Yeah, I'm going to keep buying these. Maybe some small caps we'll talk about as well. But like VDY here, SCHD, I think are in great positions to continue to buy. I mean, some of these individual stocks to get some higher yields locked in. It's kind of what I'm leading toward right now. Time will tell. You have to subscribe to join me on my path to financial independence to damn well one day retire early. And I am looking forward to this very haunting S&P 500 season. And I hope you are as well. Let me know what you're buying on these dippity dips if we so happen to get lucky to see them, because discounts are better than buying all-time highs, baby. That's how we get rich.